Hey guys, Taylor with GammaEdge here, coming at you with a market recap for April 23rd, 2025. Just another wild day in the market. Had a 100-point range from the top to the low a day. Thing for today is, we had a big gap up. However, that gap did not hold. But let's get into pre-market prep, then we'll get into the intraday price action. So first thing, always starting with the market trend model. Yesterday, we had a nice linear up day. If you're not familiar with the market trend model, it's built off the tick index. You can Investopedia that to learn more about that. And effectively what it's doing is it's measuring the real-time buying and selling, transacting in the market. So what we do is we take that intraday tick index, we create a time series out of that, which we call the cumulative tick. That is this bolded white line here. Yesterday on Tuesday, we had a nice linear up day. As I just stated, what that simply means is we had a downtrend that reversed yesterday. We saw continuous buying throughout the session, supported by filter tick buying. Filter tick is a measurement of large and significant tick readings per the index. So when we have a combination of that, combination of large buying with the filter, with the linear update, that is a great first step in our market turning framework. And so again, the first step of our market turning framework has been achieved. The next step is we want to see continuation in the coming days. So we are cautiously optimistic pre-market, but like we were saying, especially with the massive gap up, we said in our pre-market note that this would be a great test to understand if the market continues to buy that gap up or if we see selling into it. Because, since the middle of February, we've seen a few of these linear update signatures that have ultimately failed. And so again, that's why we are cautiously optimistic that, we have to respect this signal when it occurs, right? Because not all these signals lead to the next rally, but all past rallies have had this exact signature. And I'm recording this at 10:45 p.m., so we know by now that the market did not hold. We saw that with our intraday tools that we'll get to in a second, that it did not hold. And so, right, this is the benefit of having a kind of systematic process where you have, defined steps within a process. So, right, we didn't get too giddy because, yes, this was just a first step in multiple steps we needed to see in our market turning framework. However, everything in the pre-market was constructive other than, the massive gap higher, but we got great information today when that gap did not hold. So after looking at the market trend model, what we do next is we analyze the SPX options complex. Reason we do that is it's specific to the option market complex. It's inherently forward-looking by nature, so we can understand how speculators are positioned out in time. B, modern markets today, a significant amount of transactions are taking place in the options market. So you need to have an understanding of what's going on, how speculators are positioned. As it relates to the SPX, we focus on this because it is the most large liquid market, options market that we can observe. And again, by understanding where in the options market folks are transacting, and again, the SPX is the largest, most liquid that we have access to, that's going to give you a great kind of understanding of what the general market and their positioning. And then specific to SPX, there's two complexes. There's the SPX-A, SPX-P. SPX-A, which we're looking at here, think of this as your cruise ship. This is where your monthly and your quarterly expirations reside, much larger than SPX-P. This is kind of where your institutional, slower moving money is transacting. And so looking at SPX-A, it continued to be put dominated, net put dominated. We were seeing, constructive signs below spot price, which isn't surprising given the large gap up that we had, but still above spot price, there is still a lot of kind of congestion between call and put dominated strikes. We need to see that call, those put dominated strikes get cleaned up in favor of call dominated. Because right in our market turning framework, first step is that linear update with market trend model. We want to see continuation, and then we want to see the SPX complex transition from put dominated to call dominated. And then, right, just last thing to hit on the SPX A complex key focal point was 5,400. You're going to see that level come up a lot today. Moving on to SPX P complex, you can note the difference in this complex versus this. Again, this a lot of red. Here, starting to see a lot more green, especially below spot price, all call dominated. Above spot price, looking just at the distribution of call and put open interest without factoring in the delta of those strikes. This is call dominated well, constructive to see, starting to see overhead thaw out a bit here. So the SPXP full complex is looking constructive. And again, skipped over but SPXP, this is, you can think of it as your cigarette boat. It is a good bit smaller than the SPXA complex. This is more where your short-term speculators are transacting, as it includes your daily, your weekly, and specific your 0DT, where 75% of daily SPX options volume resides anyways. So coming into today, the signs were looking good as a potential turning point. The reason for that is, again, market trend model, linear update, SPXP complex starting to thaw out. And so, right as we were saying again with the massive gap up, if this is the true turning point, there's going to be plenty of time to jump on board, catch the meat of the move. So we don't need to be super eager, going full port on the open. It was critical today to just kind of understand and absorb how the market was transacting given the massive gap up. And again, just hitting on this 5400 key focal point. And then finally, we move down to our SPX 0DT complex. Key thing here is we were gapping, 100 points or whatever from prior day settlement. So we were well in call dominated territory on a 0DT basis. Something that we were noting is there were a lot of air pockets in structure. And by air pockets, we mean there just was not a ton of kind of meaningful activity at strikes, as an example, between 54.25 and 54.65. You can see relatively low net open interest. Again, that forms an air pocket to where we need to see intraday volume continue to support a move higher, because again, just kind of lack of the meaningful option activity that is positioned up here at the open. Those dealer dynamics, those kind of natural moneyness flows aren't going to be as relevant as the actual opening and closing of those contracts. So again, got the gap higher, but we need to see the market trend model confirm that. Needed to see our intraday volume analysis confirm that. And again, on 0DT, we were saying 5400 again, massive level here. So that 5400 was key on all time frames and in all complexes. So again, just kind of to recap, the kind of takeaway from pre-market prep is in the very short term, structure was getting more constructive, but SPXA, that longer term capital, had yet to meaningfully participate in terms of call speculation coming in, put speculation going out. So again, that's why we were cautiously optimistic. But as we've been saying for a while now, bulls are guilty until proven innocent. So moving on to today's price action, the bulls were unable to do anything with the gap. With the gap higher, we can see this green right here. This is price action itself, trending lower all day. Cumulative tick trending lower all day. I guess kind of the one moral victory is there really wasn't any significant selling that we saw, as opposed to Monday, significant selling, Tuesday, decent amount of buying, Wednesday, net. Although, however, short term, trend is still lower at this point now. And then go into price action itself again, gapped up to 5400. That was that key level we were talking about. Had a nice push higher, but that ultimately was not able to be held. And again, despite that push higher, we really didn't see the cumulative tick have that kind of breadth thrust higher that we saw yesterday and what we expected to see and what we wanted to see. So again, that kind of made it easy not to get FOMO, telling us that price is gonna kind of rocket higher again today. And another reason we didn't get super FOMO today is our intraday volume analysis. So this is what this output is called our volume command, volume momentum. Effectively, what we're doing is throughout the trading day on SPX 0DT specifically, because remember the bulk of the transactions at SPX are happening in 0DT, so we need to understand what's happening in that complex to understand what's happening on an intraday basis. Because remember, as I said in the pre-mark, where we were opening and structure, this intraday volume was really going to play a big role in that. If we wanted to continue higher, we needed to see that call speculation continue to move up and out, which we did not see today. And this chart demonstrates that. So again, specific to SPX 0DT, on a 5-minute basis, we aggregate the call and the put volume. Calls are green, puts are red. We find the distribution of that 5-minute volume. Then we find the midpoint, which is called the centroid. What we do is every 5 minutes, we plot those centroids. We connect the lines for you. We form these solid green and red lines. And then the purpose of that is, at any point in the market, say from the open to noon, we can see what the trend of those centroids have been, both on the call and the put side. And that trend of centroids literally represents sentiment in the market and how speculators have been behaving and transacting within the 0DT complex. So by understanding that at any point in time, we can understand two things. One, what the character of price action likely is. Is it sideways choppy like we got today? Is it trending higher, which would be call and put centroids trending higher? Is it trending lower? Call and put centroids trending lower. Not only that, if we know how they have been transacting, all things equal, we can project out what the likely path of those centroids are throughout the remainder of the session, and price follows where transactions occur. So if we're able to understand, kind of project out where those centroids are headed, we can understand where price is headed as well. And so just recapping this screenshot at the end of the day, reminder, we produce these every 5 minutes. So we'll get into showing you how this is like actionable here in a second. But we can just see that the trend of the call side was lower all session. So again, despite we got getting that gap up, we didn't see any material speculation continuing higher throughout the session, hence why we really saw no impulses higher either. And then in terms of the put side, this was fairly flat to higher. So again, why we didn't get any kind of super meltdown, because there was no meaningful put speculation higher or lower. Like we got it right here, but then it really fizzled out. Additionally, that's where we want to pair this with our market trend model, which yes, the cumulative tick was trending lower, but we really didn't see any, big, large impulses lower via the filter tick. And so here's an example for you of the utility of the tool. So this is at 1 o'clock. We can see what the centroid behavior up until that point has been. Calls have been lower, puts have been sideways to lower. So again, at this point in time, there's really no reason to expect any kind of ramp higher, especially, remember looking at the market trend model as well. So, whether you're kind of an intraday scalper looking for those kind of pops to short into, you're a credit spread trader, kind of selling above and below the centroids, or, if the market is path of least resistance is lower on the day, that takes this part of the market out of play. So, just selling call spreads if you want to do that. But again, you should be able to see the utility of this tool, kind of how we use it intraday to kind of project out what price action may be for the rest of the day, and then getting confluence with that with the market trend model. And then again, just understanding that 5,400 was key level today, where we saw just kind of a lot of oscillation around. And the last thing we'd like to do is, again, we produce these charts every 5 minutes. At the end of the day, we stitch these together automatically. We create a GIF, and then we can just kind of understand, looking at, what our price projections are doing, what the centroids are doing, what price is doing itself, just kind of replaying the day, just kind of understanding what's happening, a little bit of pattern recognition. So, we can use that going into tomorrow's session, because, after this video, you should honestly have an understanding of how to use the market trend model and this volume command in tomorrow's trading session. So if that's not clear and you're in the Discord, feel free to ask questions, leave comments, on Twitter, YouTube video, whatever. Happy to help you succeed with these. So with that, let's see what tomorrow brings. Again, the condition of the market trend model has us cautious again. Not that we were super bullish by any means coming into the day, but we were not able to see that continuation higher. Obviously, want to see what the structures look like coming in tomorrow with the overnight updates. See if those get more or less call dominated bullish, or more or less put dominated and bearish. So with that, y'all have a good night. We'll talk to you later. Thanks. Bye.